Happy Wednesday to you. We welcome you to Growth and Value Stocks. My name is James Boyd. In the chat, we have Barbara Armstrong with us. Say hello, Barbara. And just real quick, we got many of you. We got Grace with us, Silas Arv Singh with us. We also got Jay Richardson, Life in the Fast Lane, Scott Luck. Aloha back to you. Should be wearing an Aloha shirt right now. And also JP. Maybe he's co-teaching today. We'll talk about that. And also Trader Joe. Welcome to all. Now remember, this is a live session, but also if you're catching this on recording, welcome. Now, just real quick, we got some questions that we're asking in the chat, so we want to get to those as soon as possible. And today, again, we're going to talk about some of these growth and value stocks. I want to kind of really talk about some of the relative strength that we're actually seeing. We've had some interesting movement in commodities actually overnight and over the last couple of days. We'll talk about how that's playing out in terms of value stocks. We'll talk about actually how interest rates actually dropped pretty decent this morning and how that might be affecting some growth stocks. Let's hop right in. Now, remember that with what we discuss, as I talk about the information, it's done and given for general informational purposes only, should not be considered an individualized recommendation. Schwab does not recommend the use of technical analysis as a sole means of research. You really need to actually understand that sometimes if stocks go down 1, 2, 3 days or so, it might not necessarily really be affecting the fundamentals that much. It just could be price movement, okay? And so sometimes that, for some of those investors who are fundamentalists, prices going down could present some potential opportunities, as we will look at. Now, our examples will be in the paper money software application, as we do that for educational purposes only. If we bring up, let's say, dividend-paying stocks, understand that those stocks or the companies may reduce or stop paying dividends, the stock. Also, when we talk about examples, remember that investing involves risk, no reward. And so with that said, let's go ahead and actually hop right into the markets. Now, first off, I want to kind of pull this up for just a moment, okay? Now, if we pull this up, this is a list of sectors. Now, you might have a different list, per se, different tickers. The idea is the same. I pull up the sector indexes because this is not the ETF class. The ETF class is on Friday at 9:30 a.m. Eastern, live only, okay, not recorded. Now, what I want us to kind of watch this real quick is if we look at, let's say, the SPX, this is ranked by week percent. Now, remember, the purpose of week percent is to track momentum, okay? 1 month percent is actually to track trend. I want you to pay specific attention to like what has momentum and trend compared to the S&P 500. Now, whenever we talk about the S&P 500, we know it's top heavy in technology. We've hit that a million times. Now, if I pull this up, we're going to look at, say, what sectors are above this. You're going to now notice that industrials, now remember, when's the last time we saw industrials lead when the volatility was a little higher and let's say the S&P pulled back and or NASDAQ? That's a little unusual. Now, keep an eye on the big green machine, okay, John Deere, among others. You're going to see utilities is also up in there as well. You're going to see financials. Now, remember, what are we trying to get out of this? Well, we're trying to see which areas. Just because an area sells off doesn't mean every area sells off typically. And if you look at this, you're going to see that these areas, positive, financials right there. And you're going to see healthcare. Okay, now remember I said keep an eye on biotech. We also did see pharma get a push here today as well. How many of you saw that? Now I need you to understand something. Some investors might buy individual stocks because they want that volatility. Some investors say, no, spank you. I'll just take the sector, please, and I'll maybe even grab the industry group. Those are options, okay, not derivatives, options, choices, in other words, that you might consider for yourself. You're also going to see real estates there, staples. The relative strength does not have to be positive returns. It's just returns that are actually greater than the index, the SPX itself. Now, if you look at that, say the SPX, even discretionaries is even higher than that. What's below it? You're going to see transports, stocks, technology, energy, communications, and you're going to see gold that I included on this list, and you're going to see that crude oil, that black stuff, just falling down, okay, which many people kind of enjoy that. We'll talk about that in just a second. Is anyone watching that? Anyone? Okay. Now, why do I put in actually oil right there? Well, we talk about oil because that actually might relate to, let's say, transports. We put in the oil there because it might also relate to, let's say, discretionaries and so on, as we'll get into. But now what I want to do is I want to kind of show you something I thought was a little interesting this morning that we had not really, we track it, but we were seeing a little bit more strength. So first off, when we actually talk about markets as stock investors, we like to see volatility go up. That ain't true. Not if we're talking about buying something per se. Okay, if we have the position and the volatility goes up, we should know what that means. It probably means the position is going to get pushed down. High chances of that to happen. VIX actually coming back down to 18-ish. We see rates actually falling down about 2%. Okay, that's welcome. Now that's not just 2%. That's actually 2% down near the horizontal support and almost to a fresh new low. Lower rates, potentially higher stock prices. La la. Okay, many investors like that. Remember, it's mathematical, right? You have lower borrowing costs, you could actually have potential higher present values on those cash flows, but also potential higher stock prices. Oh, okay. Now we'll get to that. Now, what I took away today that was interesting that I shared on X as well is some of these actually, I'll pull this up on the left-hand side, make sure you're following along. So this is going to show the number of stocks, the percentage of stocks that are trading above their 50-day moving average. Now, again, not everything's technology. We know it's a big portion of it. But seeing this pop right back to the upside, this is showing some underlying strength in the market. Everything I know is not technology. Now, it would be nice if technology goes up, but it's not every time, okay? So percentage that pop back up there. The percentage of stocks that are above the 200 period moving average. Remember, the first one was the percentage of stocks above the 50. This, the percentage of stocks above the 200. And the last one I thought was interesting to see pop back right back to the upside is the equal weighted area. So if we had 10 sectors, all sectors are equal, okay? It's fair. People like that word fair. Not sure if that happened, but sure, fair, okay? And seeing this kind of bounce off that diagonal line, some investors might like that. They want to see broader participation, not just in technology. Now, those are kind of, now if we kind of pulled up, let's say, the Dow Jones, just fast forward the indexes, tell me what you see on the Dow Jones. What do you notice? Doesn't look bearish, okay? That's that little green dot right there. That's not my marker. That's close above the high of the low day. That is so far. Remember, we always look at this and say, when we have a red candle, how long does it go down for? So far, it went down for a day. And then we see a bullish engulfing candle right back to the upside. Now, what about the SPX? What does that look like? We know that that was the weaker one caused by NASDAQ. It's still kind of weaker. And we're seeing this kind of lagging, consolidating. What does that NASDAQ look like? It looks like it's at the bottom of the channel. Micron has earnings here today. We'll take a quick peek at that. Still lagging. But the Russell, okay, that doesn't look bearish. And you're going to kind of notice that little green dot again. So there is some profit taking. Now, by the way, we saw this 2 weeks ago in the NASDAQ. We still see it now. Some profit taking in the NASDAQ. But that kind of movement to small caps, movement to actually large caps. And by the way, if you look at the US peso, no, show some respect. The US dollar. Dollar smashing to a brand new high. Swiss franc, euro, British pound, Canadian dollar, Aussie, Kiwi, all taken, well, getting pushed down by the big greenback dollar bill here. Now, luckily, we're not really seeing this actually hurt the stock market in general, okay? But seeing some strength as rates might tick up. Now, luckily, you haven't seen that in the TNX, okay? Now, let's kind of talk about what we saw on crude oil for just a second, okay? Now, crude oil, again, now let's kind of think about this, right? When we see crude oil go down, that might present some potential opportunities. Now, those opportunities might be, let's say, travel. You know, travel. It's not just, let's say, airlines. Let's fast fire a couple. If we talk about airlines, we've been talking about that small company we've never heard of before, joking, called LUV. Okay, I mean, who comes up with this stuff? Now, if you take a look at this, poked again to a brand new high. Now, the one that we actually said was kind of leading as of yesterday was DAL. Well, that didn't go down. Okay, doink, back to the upside. But the other ones, the Chicago people, Illinois, the Fighting Illini, you're going to see that really UAL now gets into it. Okay, now the one that we're missing is really where's the Seattle-based people? The ALK, is that finally getting in that trend? And you are seeing the Alaska Air Group finally getting in that fight to the upside. Now, if you pull this back up and you look at this, that is your classic flag pattern. Now, we have Miss Barbara Armstrong with us. She might know something about fleegs. Now, we know in Canada, I grew up in upstate New York and I went to Toronto many times, and they would not say flags, they would say fleegs. Okay, now if you take a look at that on Alaska Airlines, let's start with this one first. Now, here's the deal. If we look at, let's say, let's go back about maybe a month ago, month and a half, when the situation over in Iran, the strait started to happen, right? And all of a sudden, people are like, man, I'm not going to travel because the ticket prices are higher. There's uncertainty. The first thing that you need to know about investing is there tends to be a heightened potential opportunity when there is uncertainty. Okay. Now, I know people don't like the uncertainty, but that is actually where there tends to be the greatest potential opportunity when people don't know for sure. And by the way, you never know for sure. Okay. And so there's always a calculated risk. Now, in our example, we already talked about love. We have that example. Delta, we don't. UAL, we don't. We could look at that. I'm going to use the example of the lagger Alaska Airlines. Okay. Now, if you look at this, we could say even like, hey, flag type setup. Remember the MACD, which we've said quite a bit. If that MACD stays up, it doesn't go below zero, and then the MACD pops right back to the upside, the price held the momentum. And then we're seeing on the price graph as we zoom in a little breakage of that diagonal resistance line. Now, the $1,000,000 question, right? How do we know it's going to go up? We don't know. We take a calculated risk. We designate how much capital we actually going to invest. Second, we actually designate what is the risk the investor is willing to invest. Now, example given, if we actually pull up our quick sheet, and we'll just kind of do it like this. I'm going to actually pull up the ALK right in the paper money account. Let's go to trade. Don't look at target yet. We'll look at ALK. Okay. And what I'm going to do is we're going to go back to that. Okay. And what we're going to do is we're going to click on the ask price. Now, if I click on the ask price by itself, it's just going to create the buy order itself in green. If we wanted to put that target on and stop, right click on it, buy custom with OCO bracket. Now, remember, we've used the word correlation quite a bit, right? Now think teeter-totter, okay? If oil goes up or down, how does that affect sectors? Okay. Now remember, we've been talking quite a bit about oil coming down. As oil comes down, discretionaries could actually go up. Now, those discretionaries are not just hotels or travel sites. They could also be airlines. It could also be restaurants, okay, among other things. We would also include an asterisk, home building, okay, home building. Okay, now, if we take a look at buy custom with OCO bracket, you're now going to see there's the order, okay? So this is saying if we click on that, when we right-clicked on the ask price, it said 52.44. That's a limit order. The limit is what it sounds like. That's a limit of what you're willing to pay. Could be filled at a lower price. Target I actually need help with, where would you put it? And the stop actually underneath, where would you put it? Now, I'm putting you on the spot here. Now, sometimes people kind of don't like being put on the spot. Tough. That's just the way life is, okay? You're on the spot, always. Now, what I'm going to do is, if I went back to that chart, let's kind of show you this. If we were to look at let's talk about the downside first. The support areas, if we took at the highest price, and I'm using a price level to do this. When you use a price level, if we right click on the chart, go to edit properties, it will actually show the price on the right. Okay, so if you don't have, someone asked me that question in the chat. How do I get that price to show? Well, horizontal price level right there. And when you draw a line, you can right click on the line and say show price on right. That's how we're doing that. Okay. Why do I do that for this class? I want you to kind of see the price levels, and I want you to choose which level you would set the stop underneath. Now, what I'm going to do just real quick is I'm going to bring this up, and we're going to kind of take these the prices that we're looking at now. 52.37 support. Now, which support would you take? Now, comment came in from BJ on. He said 50. Sam actually says stock is a dud. Agreed. Move along. Oh, you could be wrong. Could be right. Now, if we take a look at, let's say, 55. Now, we know that the UL has been probably the strongest with Delta. We know that. That does not mean that one of the laggards might not start to go up too. We know that Love's been the third. This has been maybe the fourth horse, so to say. So now, if we pull this up and look at, let's say, the support level, let's say we took the 50 level. That's going to give us 49 as far as the stop, less 2%. Support, less 2%. Risk is 337. Percent is going to be 643. Okay? Now, ATR, if we just kind of pop this in there, we got an ATR of 249. Notice that is not going to give us the multiple of 2. Now, I'll show this because some people like to kind of see that variation. I'm going to now, we like to kind of show an example where the dollar risk to the ATR, that's a 2 multiple. If we set that, if that multiple is less than 2, we probably have a greater chance of getting stopped out. That actually means that your stop is closer. Of course it is, because we took the first line. If we actually took 48.5, okay, that's going to get us to more what we would normally be talking about. But BJ, who said take 50, they're setting a stop a little tighter. Now, I'm going to maybe push back on this as I look at those numbers again. If we set it there, it's going to allow that higher low if it were to happen. So I'm going to kind of take it more along the realm of what we normally talk about. Now, BJ, if you said I'm going to take the 50, if that stock pulls back for a day or two, it's not allowing a whole lot of breathing room. That's the con about that. Now, we've just gone through that. Right click on that chart. Actually, we already have that up. Where's that stop again? Let's bring it up. It's going to be 47.54. Now, I do see in the chat 47.54. Let's put that there. You said I saw 55 was the target. Well, let's go back and look at that just real quick. Pull this up. 55 was the area that was there. And the second area was 60. I also saw 60. We're going to show the example of 60. Now, Scott actually, now I don't know if Scott just does this and just stirs the pot. Now, Scott, are you kind of one of those people that stir the pot and you just want to have a nice, fun discussion? Is that what you like to do? Scott's like, do I have to answer? Now, here's the deal. I want to actually go back to just pull up just real quick those 4 stocks side by side. We're going to look at UAL, Delta, Love, and we're also going to look at Alaska side by side. Just want to compare them, okay? Now, I'm going to pull up UAL first. It doesn't matter which one you pull up because we're just going to, there it is. And I'm just going to bring it up on a comparison chart on Schwab.com. Now, what I'm going to do is if I pull this up, I'm going to scroll down. And we're going to get down to the area where we could actually just say, look, let me just see these stocks on a peer comparison. Now, here they are. Now, the one we did not bring up is kind of the Southwest version of Europe called Ryanair. Nah, I lived in Europe. They don't like that comparison, okay? They don't like to be, U.S. comparison, okay? They don't like that. But we're going to include that anyway. Now, what I'm going to do is let's kind of show more. And it's going to bring it up, but we're going to kind of put these in order how we like to see them. UAL first, then Delta, then we actually got Love, okay? Delta, Love, and I'm also going to put that, let's put Alaska there. I will include Ryanair, okay? There we go. Now, I know some of you are living in Europe now. Now, if we kind of look at this, okay? If we kind of double checked, and kind of said, okay, what do we got? So the dark, if we look at the last 3 months, which has gone up, it looks like UAL. Now, here's the thing. Scott said a dud. I don't know about dud. I mean, stud. Maybe he mistyped that. Okay, maybe he meant stud, not dud. Okay, because when you actually look at, let's say, the 35%, that doesn't look like a dud. I mean, it doesn't look like it on a price graph, but there's been a percentage rebound. Lower price stock, though. That's the asterisk on that. Now, you're also going to see what has been maybe a lagging one. I'm just using Scott's language here. The lagging one has been Ryanair. I mean, if we're talking about one that's lagged, it's Ryanair. If we go back to the 1 month, you're going to also see, now remember, the color code's up top. We can see that there. The color code is going to be also Alaska. Okay, talked about dud. I don't know about all that. I mean, it's right there. Okay, now where we've probably seen some differences, the lagging on the 9 month, yes. Statistically, we're talking about statistics, not personal feeling here. Okay, yes, the lag is actually been on 9 month. When we look at the 1 year, yes. So where's Scott right? I mean, come on, he's been a good participant. Scott is right when we talk about that 9 month, 1 year. Yes. Statistically, that's true. Okay. Now, the one that's been the thoroughbred, okay, on that 1 year has been really DAL, and also that one right there, Love. That's 60%. Now, the big thing on the Love, when they had the activist investor that pushed for bag fees and among other fees, and more fees, okay, that is where we really saw the pump in the price on Love. Okay, now, if we talk about the fundamentals, super quick, when we look at the margins, yeah, the margin, you don't see that net profit margin on ALK. It's the weakest. So is Scott right? Yeah, now, by the way, these are the historical margins. So you got to understand that. That's not saying that in the future it can't change. Return on assets is also low as well. Return on equity is low as well. So true to what we said, it's really been DAL, UAL first, then Love. Yeah, Alaska has not, if we look at the numbers statistically, they're not the sharpest in the group. Fair comment, Scott. Okay? Now, we got to ask ourselves, the question is, Ryanair that trades on the NASDAQ, that is also one that actually has some pretty higher, if you will, return on assets as well. Need to pull up Ryanair. Now, here's the thing. If you're buying a house, you don't just look at the house that you like. You also look at the neighborhood, because the neighborhood could affect your house price. So we probably need to, in fairness, pull up Ryanair as well and say, is there an upward trend here? Okay, now, the one thing we need to understand with earnings per share, yes, very low earnings per share on Alaska. When we also talk about price to earnings, yes. Okay, so now Scott's comments are making more sense when we put some numbers behind comments and words. So price to earnings is 91. Hello. Okay, pretty expensive here. Now, you got to remember, not everyone's a technician. Okay, when you look at price to earnings, that's historical earnings. This is not forward looking here. This is price now price to historical earnings. But yeah, if we're talking about what they put out compared to the current stock price, it ain't cheap. Okay. Now, if we also take a look at it and scroll down and we look at this sales growth, remember, if someone's going to buy something that has a high P, it better be something that has a high sales growth. Not just historical, but really looking forward. And if we take a look at it and we look at the forecast, you're going to see that this, okay, do you see how the numbers are playing out now? Kind of put Scott on that kind of said, Scott, let's have a little discussion. Why Scott say, my gosh, when you look at the forecast, we're talking about the forecast negative. Earnings per share forecast, 3 to 5 year, 40. So the next year, that forecast, which by the way, those investors know that, it's already out there, it's not new information. They kind of predicted some softness. It's been soft. And the only thing that we kind of see the forecast of the 3 to 5 year is really actually on the, that's the highest, second highest over the next 3 to 5 years. It's Love, for crying out loud. That's the highest. So what's the takeaway here? Is the comment warranted? Yeah, in some respect it is. Now you got to remember is those fundamentals, when we look at fundamentals, when we talk about fundamentals, they're not all forward looking. Earnings, P, historical. Sales, historical. Cash flow, historical. We need to look at some of these forecasted numbers. forecasting or forecast numbers are not bad words. They're actually what investors look at to see if could there be a potential opportunity. Whenever you say something forecasted, you just have to put an asterisk by it. It's not actual, it's a forecast. Now, if we take a look at this, could those investors be saying, look, there has been some weakness, and maybe some of that weakness might turn into potential strength? Could the business change like actually Love did? That's the point. Okay. Now, so trade number one was Alaska. We already have the example of Love already. I don't have a whole lot more to say really on Delta and Love besides they're just a continuance. Excuse me, UAL. There's just a continuance of what we've been talking about. Okay. Now, where we do actually have to kind of make mention of something different that we saw along the same vein. Okay. Now, I'm going to just kind of make mention of a couple. Now, let me ask you a question, okay? So we talked about this theme of like if oil prices go down, we actually could see maybe the travel theme, discretionary theme. Underneath the discretionary theme, let's say it's Airbnb. Airbnb, I don't know what you call this candlestick, but if I pulled out a yardstick, we could maybe measure a first down with that candlestick. Now, not maybe if you blew it up, maybe. Okay. Big move in actually Airbnb. Why now? If you actually pull up Marriott, you're not seeing the movement in Marriott. You're not. Are we seeing the movement in Hilton? No. Are we actually seeing the movement in EXPE? Okay. And are we seeing actually that movement in Booking? Okay. So what we're seeing is kind of right now the resurgence of discretionary travel searching. Okay. Booking, EXPE. Okay. And also Airbnb. Now that movement today in EXPE, you're thinking, oh, it was just all like, it had a gap up. That gap was not that huge. That was like a $3.50 gap. And that stock gapped up. Now remember, if you're watching, okay, those indexes we talk about, which we include gold and silver and oil, you see oil plunging to the downside. That process of thinking here, discretionaries, travel, and so on, and you're actually seeing that in this case, that was a decent move off that gap. Now, I also want to bring up the other one real quick, the cruise lines. We had earnings on that, so that was kind of not a play over the last 2 days or so. The movement that we're actually seeing is in Royal Caribbean, okay? And the second one here is on NCLH. Now, we did not make mention, now that one is actually getting a little push, but I do want to go back to the airline stock. And that airline stock, which is traded on the NASDAQ, Ryanair, which we needed to bring up, there she is. Now, now let's kind of pull up, let's say, analyze fundamentals for just a moment. Pull this up. Now, when we looked at this, you're going to see when I said Europe, Ireland, Italy, Spain, UK, internationally, etc. When we look at these numbers during COVID, yes, were weaker, of course. Okay. Some areas you couldn't even really travel. And those numbers, we have fiscal year 25. Now, when you look at those sales per share, and it all starts with sales, right? Revenue, okay, top line, 1362. If we want to see quarterly, again, which is where you're going to see really some seasonal patterns here, Christmas, Thanksgiving, summer, and so on, spring break, there we can actually see the 26 numbers. Now, what I'm going to do is I'm going to pull this back up to the chart, and we're going to trade this as number 2. Now, the earnings, when is the earnings coming up? It's on July 20th. So we're about 3 weeks away. Now, some people, when I pull up a chart making a brand new high, they're uncomfortable with that. I always push back a little bit and said, when you met your spouse, hopefully they were at an all-time high. And I think they were. So I don't know why people maybe don't like stocks at brand new highs. Okay. Just confirmation of uptrend. Now, by the way, when you got married, you were probably at a brand new high too. Okay. I mean, don't disrespect yourself. I mean, you probably were, okay? So all-time highs is not a bad thing or a 52-week high. Now, if you take a look at this, I'm going to right-click on this chart in the paper money account, okay? And we're going to go to charts. And if you pull this up, Ryanair. Now, Some people like stocks that might have been, they've pulled back, they based, and they're maybe starting to show some reversal. Okay. Now, the big thing about this is it's early. Maybe some investors might say, well, James, we just kind of broke to a short term high over the last 20 days or so, maybe the last 2 months. How do we know it's going to go up? Well, if we buy at a high, how do we know it's going to go up? If we buy in the middle, how do we know it's going to go up? If we actually buy at a low, kind of where it's starting to reverse, how do we know it's going to go up? Guys and gals, it never ends. Okay, we don't know what happens beyond the right hand side. And the biggest thing we need to know is how much capital does the investor want to invest, and how much are they willing to risk? Those are the two questions. We need to get over. We don't know what tomorrow brings. We're never going to know. The investor is buying the stock trend because they think that if the stock has a high, that stock might make a higher low and trend. Now, let's actually go back to this just real quick. Yeah, now Zincs 560 says, I've never thought of myself as a chart. Your spouse does. Okay, now here we go. Buy custom with OCO bracket. Now, is anyone laughing? Please tell me I'm not the only one. Now, here's the deal. I'm going to right click on the chart. Okay. Now, that could be a whole class by itself. Okay. And if we take a look at this, we're going to buy these shares. Now, it's about $64. So we could probably buy close to 100. Okay. Now, if we look at this, 64.13. Support underneath, if we kind of use this little plateau area. Now, remember, if we use tight stops, 61-ish is going to be probably too tight. We're probably going to need to set it underneath that 60.64. So we punch these numbers in 64.10, set that stop underneath 60.64. That's going to give us that, there's the risk dollar-wise, 467, percentage, 7%. ATR, what's that ATR? I don't have it on this chart. Where'd it go? Bring it back up. $1.83. And that $1.83, let's see where we are. Where are we at? Yeah. Okay. So we're trying to give it a little bit more breathing room. Now, when we say breathing room, where? Let me kind of mark that so you can see that. I'm setting it right underneath here where we had a little consolidation. Okay. That consolidation, if we go back and say, okay, 60-ish, it's going to give us 59.43. 59.43. Okay. Dated GTC. Dated GTC. Wait, how did we get here? Well, when we pulled up, let's say, kind of walking through that top-down analysis as far as what was moving, what's causing that correlation to happen potentially, we know about the other airlines, we get it. But when we looked at the competitors, and this is what people don't do, they always just look at the one. Don't just look at the one, look at the competitors. The competitors are trying to actually do the exact same thing of the stock that you're actually looking at to begin with. And they might be doing it better. And their fundamentals might be stronger. Their technicals also might be stronger than the one you're looking at. So the investor that has experience says, let me see the competitors as well, along with the subject one I'm looking at. And they say, look, maybe the other one might be kind of more what they're looking for anyway. That's how we got to Ryanair Airlines. Now, if we actually went to also back this up and said, where do we see the resistance on the chart? Well, a resistance, you got about 67. Probably, well, can't do the trade for that. Probably going to need the middle of this channel. Okay. Word of the day, channel. Word of the day, correlation. Okay. And if we take a look at that, that's going to be right around 70, 75 or so. Okay. Now, if we start shooting to the upside, oil stays down lower for longer, well, the sales might go up. Sales go up, the earnings per share might go up, and so on and so on and so on. That's the idea. Okay. Now, if we take a look at this, what you're now going to note. Now, by the way, if you get the sales to go up, okay, price to sales actually might, the price might be more supported by sales. If the sales go up and the earnings per share go up, the price might be more supported by the earnings. If the earnings actually go, sales and earnings go up, the company might say, look, we might pay a dividend if they don't already. Second, they might raise the dividend. So again, sales going up, earnings per share going up, it could lead to positive potential technical and fundamental reasons, okay? And there can be sometimes a linkage to those. Now, sometimes when there's a lot of speculation, those investors technically might get ahead of the fundamentals, and that happens. Now, if we go to confirm and send trade number 2, there's Ryanair. Now, this is buy limit order, 64.13. Target, remember how the stop works. If it goes to that price or less. All right. Now, let's go to just an announcement real quick. Barbara actually posted in the chat. So one thing just real quick is coming up tomorrow night, Thursday, June 25th at 7 to 8 p.m. Eastern, 1 hour. Put on your calendar that there's actually a mid-year market outlook with Jim, Lizanne, Joe, Cooper, and Chris. And they're some of them are actually in charge of different things such as, and they provide perspective on different asset classes. Example, Jim actually looks at currency, digital currencies. Jim, chief investment strategist. Joe, head of trading and derivatives, fixed income, and equity research. So they're going to share their insights and perspective on different asset classes. That will be tomorrow night. Let me send this to you. Barbara did, but I'm going to send it again. Thank you, Barbara. And you're going to see it's right there. You can register for that. Just ask for your email address because it's going to send you a link, first name, last name. And also, if you have any questions, they will be taking those questions and answering those as well. And actually, it looks like Connie's here. Sorry, Connie, I thought Barb was actually here initially. Maybe you jumped in for Barb, okay? So thank you, Connie, for that. Now, just really quick, let's go back to something. Let's also go look at some other ones that kind of stood out as well. Now, we did see today home builders, okay? Now, remember, this is going down the same vein. We're drilling a hole down, and we're saying, geez, if oil goes down, well, maybe people actually want to buy stuff like retail, okay? Could be Amazon, could be going to the mall. It could be the hotels we talked about, could be the airlines, could be the cruise ships. It actually could be blasted a place to live, okay? Place to live / maybe buying stuff within the home. Now, the big thing that we actually saw here today, I'm just going to use an example of home builders. And that example of actually home builders, if we pull this up now, how could you see that? Well, let's go to Market Watch, visualize. Remember, those home builders, they're underneath the umbrella of discretionaries. Now, we could push back on that a little bit and say, well, is that really, now this is how we get to some of the things we talked about. There, the tickers are right there. But if we also pull up some of these, those home builders are right here. They're called household durables, okay? And you're going to see D.R. Horton, Pulte, Lennar, and you're going to see Garmin, among others, durables. Not everything is home builders. But if we pulled up just one of those and said, just show us a little bit what's going on there. Now, it wasn't just, let's say, a stock. It was the group, the industry group, home builders. Now, how could you have known that? Well, I posted on X this morning about it. If you're not following me on X, why not? Okay, let's be friends. Now, the biggest actually thing is, I won't go into the home builders exactly because I think we hit the oil theme quite a bit, but just kind of keep in mind, it's not just the airlines or the cruise ships. It's also the travel sites. We mentioned that, but it's also in the home builders. Now, I do want to also go to a different area here. And you're saying, thank heavens. Now, here's the thing. A lot of times people think that, oh, yeah, you got to have 10 different ideas. That's not true. I mean, just ask the people that were in semiconductors in the last month. Do you think they wish they had different ideas? That's funny. Okay. So when you find one or two areas that might have those movements, those investors tend to focus in those movements and they try to ride those trends. All right, now let's switch it up, okay? Let's go back to industrials for just a second, okay? Now we know those industrials. Now I'm going to use the industrial sector, the index version. You might use a different ticker. I'm fine with that. The industrials they were one of the areas that had some of the relative strength. We talked about Caterpillar. We did the example trade on that. It's trying to make a higher low. Now, I'm the first one to tell you, nobody likes a higher low until it's done or until we're starting to see a bounce. Caterpillar trying to get a bounce. Welcomed. Now, that's not the one we're talking about. The one that we're going to talk about is, now remember, Caterpillar, the big yellow machine, and the John Deere, the big green machine. Now, some of you fall in love with the colors, just like we do with tools. Milwaukee, DeWalt, Ryobi, and so on. Some people like the Green Machine. Okay. Now, if we look at John Deere, we're going to show this in an example. We've been talking about this one in the last couple of days where we had higher low, higher low, higher low. And today the price pressing to the upside. Now, over the last couple of days, we've been really seeing the MACD not able to get below that horizontal line. Now, when I say this, before I get into this, we cannot now, by the way, let me ask you a question. Is there any other industrial stock that you're watching where you're saying, James, you better pay attention to blank? What is it? Share now. Speak now, forever hold your peace. Well, as you type in the answer to that question, any other industrials? Let's go to industrials for just a sec. Some of the industrials, now some of you pointed out in the chat, Uber was getting lift. The knock on Uber is Uber's not an uptrend. The one that we might say, hello, keep an eye on, trend-wise, GE, GEV, and we would also probably include, where are you? Okay, GLV, GLW, excuse me, GLW. That's Corning. Now let me flash these just real quick. GE, brand new high. Now I know. Now here's the thing. When it pulled back from here, and it pulled back here, and it pulled back here. Now you got to think about something just real quick. As people sometimes, we get emotionally down. When prices fall down, we emotionally internalize that, don't we? Now I did that too. My gosh. Okay. But when it falls down, if you understand technicals, if you understand that higher highs and higher lows are created from prices pulling back. You understand that actually if we make a higher high, the greatest chance to make a higher low. Do you understand that? So when that price falling down, as the price falls down, it actually makes the price multiples potentially more attractive, especially if it's a business that's growing and has had some relative strength. The price is pulling back doesn't mean it's going to crash. It's making some potential higher lows or equal lows if we're still above support. Be very careful about emotionally folding. Let me say that again. Be very careful of emotionally folding, because if your head is down, it's hard to see those bounce entries and breakouts when your head is down. That's caused by emotion. The time that you want to be watching stocks is when the prices are falling. Okay? All right. James, pretty crystal clear on that. Okay? Now, let's go back to also GV. What does that look like? Trying to make a little flag, but the one I want to pull up is really, if I had a little bit more time, my gosh, little Corning here, squirting here almost 10%. Now, I got to go back to Deere, but I want to make mention of those other ones. We're going to right-click on this price graph, okay? In the paper money count, we're going to go to send that Ryanair because we talked about that already and how that stop works. We're going to go back to Deere. We're going to right-click on the chart, and what I'm going to do in the IRA, we're going to add that to the IRA account. Now, just for time's sake, I'll keep this amount because we're running out of time, but I'm going to put that. We did this trade in the margin account yesterday. We're going to use those same numbers, 660, okay? Now, obviously, if we trade in different accounts, they might have a different account size. That stop loss was at 565. Thank you very much. We'll use that from yesterday. Dated GTC. Now, we're showing the margin. We're going to go to the IRA right there. Now, here it is. 612.96, 660, which is there. And the 565 is there. Remember, sell the stock if it goes to that price or less. Yeah, now let me go back to something just real quick. GLW is gone. Choose a different ticker. Now, we got to double check that. Not that we disbelieve James. He's a good man. But if I go back to GLW, now here's the deal. Where was GLW this morning? GLW was sitting its body of the candle right off the 10-period moving average. Now, wait, if you can go up 10%, it can go down 5%. If you go down 5%, if you go down some off the high, was there some opportunity here right here this morning, the last couple of hours, minutes, maybe to try to buy off that bounce spot. What type of candle was that as of yesterday? That's a classic hammer, okay? So now the reason why I kind of bring this up, we do the trades in class. But if you don't have class, maybe you saw yourself and you saw that, okay? That was this morning, okay? Now, got to wrap this up. But Cameron May will be coming up next. I want to thank you so much for your comments and your participation. We'll conclude with actually this DE trade right there. John Deere, target, stop, and we'll send that. Remember how the stop works. If it goes to that price or less, sell the shares. Could be filled at a lower price. Yeah, exactly. Correct, James. We're on the same page. Now, also remember with what we talked about, it was done for example, illustrative purposes only. I really wanted you to make sure that you have a every time you see a pullback in the market, you should be getting better to emotionally be stronger to handle that and understand it technically and fundamentally. That's the goal. Improve. Now, also with that, remember with what we talked about, all investing involves risk. This has been the class on trading growth and value stocks. And also remember that Cameron May will be coming up next. Stay tuned for our next webcast. Thanks to Connie. Don't forget the webcast tomorrow night, the special webcast, mid-year outlook. Thanks so much. I'll be back on Trading Trend tomorrow. And thanks to all of you for the fun and also some looks at some stocks as well. Take care. Bye-bye.